markets stabilize after inline FOMC minutes, oil prices face volatility, U.S. Inflation Reduction Law enacted. Hello, everybody. Buffy the Rate Slayer here, and we are back with the third episode of the August 2022 Weekly Market Insight Series, which is coming directly from the Capital Markets Trading Desk right here at SunWest Mortgage Company. While the market has reacted as if the minutes were dovish, I'm not sure if that's the right interpretation. To be sure, they did repeat the line that a slower pace of tightening would likely be appropriate in the future, and at the same time acknowledge that growth momentum is fairly weak and the economy will expand below trend in the second half. The dollar is modestly lower in the light trading as equity futures are firm. Elevated oil volatility continues to reflect a market split between the bulls and the bears. U.S. oil benchmark West Texas Intermediate crude, which split to $86 a barrel at the beginning of the week, is now trading at $90. Let's see what else is under the surface, shall we? With sharp declines in orders and shipments, the Federal Reserve Bank of New York's August General Business Conditions Index slumped more than 42% to minus 31.3, with the drop just behind that seen in April 2020. U.S. consumers are standing firm in the face of hot inflation and rising interest rates, even if they're spending with a little less gusto and a lot more frustration. U.S. retail sales, the week's biggest economic report, came out to be flat in July after a 0.8% jump in June. Applications for U.S. unemployment insurance fell by 2,000 to 250,000 in the week ending August 13th, suggesting demand for labor remains healthy. Meanwhile, the U.S. administration has recently passed the Inflation Reduction Act 2022 and has joined forces with the central bank in the fight to lower inflation. The IRA aims to boost government revenues by around $737 billion and spend $437 billion over the period of 2022 to 2031. Now, let's see what else is happening around the globe. The U.S. and Taiwan will start formal talks next week on the Trade and Economic Initiative, following through on a long-planned promise to deepen their ties amid opposition from China. UK inflation accelerated 10% in July from a year earlier and reached the highest in 40 years, intensifying a squeeze on consumers and added to pressure for action on the Bank of England. Meanwhile, the International Monetary Fund has bad news for the big three, the United States, China, and the Euro area, which comprises about 50% of the global economy and the rest of the world. IMF chief economist Gorenchis mentioned that the world may soon be teetering on the edge of a global recession. Growth slows from the last year's 6.5 to 3.2 this year. That reflects a stalling growth majority from the world's three largest economies. China's central bank, keeping in mind the economic downturn led by worsening property slump and continued coronavirus lockdowns, has already cut both 1-year and 7-day lending rates by 10 basis points this week. Wondering how the housing market is doing? Well, let me tell you. So the new U.S. home construction fell in July by more than forecast. Residential starts dropped to a 1.45 million annualized rate from 1.6 million pace in June. Applications to build, which measures future construction, declined 1.3 to 1.67 million. However, the failed U.S. home purchases deals jumped to 63,000 in July as buyers continued to back away from the market and rising mortgage rates. A gauge of U.S. home builders' sentiment declined for an 8th straight month, marking the worst stretch since 2007 amid higher borrowing costs and elevated prices. The National Association of Home Buyers gauge decreased by 6 points to 49 points in August. Mortgage application volumes declined again last week. The Mortgage Bankers Association index decreased 2.3% during the week ending August 12th, giving back its tiny gains over the previous 2 weeks. The refinance index fell 5%, however, purchases retreated 1%. Let's wrap it up. As per minutes, Federal Reserve officials have seen little evidence that U.S. inflation pressures were easing and steeled themselves to force the economy to slow down to control an ongoing surge in prices. However, the question market is trying to figure out is what would be the size of the September rate hike, whether it be 75 or 50 basis points. Let's just toss a coin, shall we? I'm just kidding. Certain inflation reports are due to be released before the next meeting and that are likely to confirm the pace of the next hike. A point to be noted is that the darker scenario may entail persistent price pressures, forcing restrictive borrowing costs amid a shrinking economy. Well, that's it for this week. If you like this video, please hit the like button, and to be notified every time we upload a new video, please subscribe. Your support of our channel is greatly appreciated. So stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have an awesome Friday, everyone, and an even better weekend. Buffy out.